Are you holding out hope for a Santa Claus rally at the end of December this year? Well, unfortunately, you might have another thing coming, folks, because sometimes the Santa that you get is not the Santa that you wanted. And while it is damn near impossible to time a market crash exactly, the conditions for a severe sell-off in the stock market will be present through the remainder of this year. And there is one day in particular that I see where the stock market is going to be very vulnerable to an across-the-board sell-off. Now, before we get into the day that I think it could happen, emphasis could, let's talk about why it could happen. And check out this article from December 9th in Reuters, U.S. household wealth falls for third consecutive quarter. And it's this sentence here that I'm zeroing in on in this article here. U.S. households have lost nearly $7 trillion in net worth this year, almost entirely due to the stock market's 2022 swoon. Now, about $1 trillion of that $7 trillion in lost net worth is due to new debts, but about $6 trillion of that loss in value is all due to losses in the stock market. And that brings me to the why I think this market could have a monster sell-off into the end of the year, and that is because of tax loss harvesting. And this is in Investopedia. Tax loss harvesting is the act of selling an asset, usually a stock, at a loss in order to lower your taxable income for the year. And right now, Americans across the board are sitting on almost $6 trillion of unrealized capital losses on their books right now. $6 trillion of capital losses that if they were to sell in December, at the very least, they could salvage a little bit of money by lowering their taxable income for the year by selling off those stocks. And this is something the U.S. stock market hasn't faced in years. Take a look at this trend of the S&P 500 going all the way back to the GFC. And since the global financial crisis, there really hasn't been a tax loss harvesting opportunity on a market-wide basis. There's always those isolated stocks that are down for the year heading into December, and then people harvest those losses, and so they sell off a little bit more in December as people do that. But this year is something different. Take a look right above my melon here. The whole market is down over 20% year to date. That means that there is a significant opportunity for Americans to lower their taxable income for the year by selling stocks into December, more so than we've seen in over a decade. Even here with the pandemic, by the end of the year, stocks had recovered and were actually positive for the year. And really for the last couple of years, there's only been one instance where conditions even remotely resembled what we're looking at this year. Check out right here. This is December of 2018. Now, in December of 2018, the market was worried that the Federal Reserve might be over-tightening and that could lead to a severe recession. Gee, does that sound familiar? Now, this horizontal blue line here, that marks where stocks started the year at. So you can see in December, we were really only down a little bit. So there wasn't really a huge opportunity for tax loss harvesting in 2018, but we did have a little bit of panic about the Fed. And you can see towards the end of the year, stocks started to sell off, and they sold off hard, ending on December 24th, Christmas Eve of 2018. The market sold off 600 points. That's after 3 consecutive days of 500-point sell-offs. December of 2018 was something of a bloodbath for stocks. Now, another thing I'm worried about right now is this technical setup in the S&P 500. This is a chart going back to really the start of the year here. You can see this descending level of resistance that we've now hit 1, 2, 3 times. And if we zoom in on this most recent occasion, you can see here, this is not looking very good. We've got both this descending level of resistance and the 200-day moving average. It looked like we were threatening a breakout, but even after this week, after a lower than expected CPI print and what I consider to be a dovish Fed yesterday, still the market is way down on this news. This is a significant rejection of this level, and this tells me that the market is heading lower. Now look, nobody can tell you on this day is when the stock market is going to crash. Nobody is that good. Anybody who claims to be that good is full of it. But what you can do is you can look at history. You can look at the technical indicators. You can look at the macroeconomic indicators, and you can say the conditions for a market-wide sell-off will be present on this day. Kind of like this sign that you've seen at every campground you've ever been to. Smokey isn't telling us there's going to be a forest fire today. Smokey doesn't know that. A forest fire requires that spark to get started. But Smokey can say, look, it hasn't rained in a while, and it's windy. Conditions are very dry, so there is an extreme danger of a fire today. That spark that starts it may or may not happen, but the conditions are present. And that's why I am looking at this calendar right now. And remember, it was the days leading up to Christmas Eve that sell-off in 2018 really hit its stride. And that's when we had the big sell-off and the market bottomed out. In the lead up to a big holiday, you tend to get periods of low liquidity. And that's what really worries me about December 23rd, about next Friday. Next Friday is the last trading day before Christmas. It's the day before a weekend. You're going to have a lot of people on vacation, a lot of people away from the desk, on the road, traveling to grandma's. You are going to have a period of very low liquidity in the stock market with very few traders actually participating. And during days of low liquidity, that's when the market is very vulnerable to a big sell-off. Because on a day like December 23rd, when there's very few people trading, there will be very few dip buyers available to come in and buy up those shares that people could be selling in order to harvest the tax loss because there's only a few trading days left in the year. Now, again, that is not to say on this day the market will crash. Nobody knows that, and anybody claiming to know that is full of it. But I can tell you the conditions for a market crash will be damn near perfect on December 23rd. You've got a major technical breakdown in the S&P 500. You've got a huge opportunity for tax loss harvesting with Americans' net worth down $7 trillion on the year. You've got a market that is worried about the Federal Reserve over-tightening, just like we had in December of 2018, and you're going to have a period of ultra-low liquidity heading into the biggest holiday of the year. So long story short, will the market crash on December 23rd? Maybe, I don't know. But the conditions for a severe market-wide sell-off will hit their peak on December 23rd of 2022. And in the interest of full disclosure, I should mention that I am currently short the NASDAQ right now. I am holding puts in QQQ, which is an ETF that tracks the price action in the NASDAQ composite. Until next time, live small and dream big.